first off, how disappointed were you by these figures?
Well, I am disappointed, but not overly so. It was definitely weaker than expected, but it was just mere 3% decline. And machinery orders often go up and down by 10%. So I would say the decline was disappointing, but it could just be a statistical noise. Having said that, given that last month machine orders were saying that they were expecting 10% expansion in machine order, the April was a bad start for the quarter. So generally, I can't deny this was a negative news for the outlook for the machine orders. The capital expenditure for Japan.
Yeah, let me ask you, how does that filter through to CapEx? I mean, aren't we expecting this big surge from rebuilding after the earthquake? When are we going to see that clock into the numbers?
Yeah, well, usually machine orders, it's an order, so it's a leading indicator. So if it goes into the actual capital expenditure with a lag of 1 to 2 months. But the outlook, I think it's too early to make a judgment on capital expenditure after what's happening in the capital expenditure after the earthquake. April is just 1 month after the earthquake, and I assume that manufacturers were still, trying to decide what to do.
Okay, Okubo-san, one more question for you. We saw a contraction in the first quarter of this year because of the earthquake. What do you see for GDP in the second quarter?
The second quarter, we expect to see a flat growth. On month-on-month basis, we are actually confident that the economy has actually started to expand robustly since May. But I think for the quarter, the decline in March and April was too strong to offset the decline. So flat growth in the second quarter.